This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, April 14th, 2016. Euro dollar. So the euro has come back under pressure after finally taking out some key support at 113.27, and this sets up the possibility for some form of a top after the market recently put in a fresh 2016 high at 114.65. From here, there's risk for deeper setbacks over the coming sessions to test next key support at 111.45 further down. At this point, any rally should be very well capped, with only a break back above 114.65 to negate the newly adopted bearish outlook, short-term bearish outlook for the euro. Sterling dollar. So cable remains under pressure with the market continuing to be very well capped into rallies, and the focus now is on a retest and break below recent support at 140.05, below which exposes a retest of the 7-year low that was established back in February at 138.36. At this point, rallies should continue to be very well capped, with only a break back above 145.15 to really delay this outlook. Initial resistance comes in by that high that we saw on the 12th of April at 143.48. Dollar yen. So dollar yen has extended its correction out from that recent multi-month low, with the market looking potentially to extend further, but any additional rally should be very well capped to the previous support now turn resistance at 110.67 ahead of the next bearish downside extension towards a measured move objective at 106.50 further down. Ultimately, only back above 114.87 would really compromise the bearish outlook for dollar yen. Euro Swiss. So Euro Swiss has been consolidating near range lows, although while the market holds above 108, the market continues to retain its broader recovery outlook and should eventually trade higher back above recent resistance at 110.24 and towards the multi-month peak at 112 further up. At this point, only a break back below 108 would compromise this recovery outlook for Euro Swiss. Aussie dollar. So Aussie continues to hover or continues to trade just off its recent 2016 high at 77.23, but is having a hard time establishing above that level. At this point, we need to see a break above 77.23 to open the next major upside extension towards 78.50 further up, but inability to establish above 77.23 could suggest that the market is looking to top out up here ahead of the next major downside extension, which will be confirmed on a break below key support right now at 74.77. Dollar CAD. So dollar CAD is showing signs of a bit of a recovery in recent trade after breaking down to a fresh multi-month low and 2016 low, with the market trading all the way down to 27.45 ahead of this bounce. At this point, there is still risk for deeper setbacks while the market holds below 132.17, with the market potentially exposed down towards a measured move at 125. Again, a break back above 132.17 would ultimately be required to take the pressure off the downside. Kiwi dollar. So Kiwi continues to show just how well capped it is on rallies ahead of 70, with the market very well capped into the 69s. At this point, another topside failure above 69 suggests the market could be poised to roll over for the next major downside extension. A break below 67.59 will be required to strengthen this outlook and accelerate declines. SPX 500. So the S&P 500 is not yet ready to roll back over, with the market continuing to extend its rally out from the 1808 multi-month lows all the way back up above the recent high at 2080, and now looking like it potentially could be wanting to test the 2100 area. But overall, the market is expected to put in a meaningful medium-term and longer-term lower top somewhere ahead of 2100, or at least retain a close below 2100 on a weekly close basis ahead of the next major downside extension. Now, we would need to see a breakback below 2021 to strengthen this outlook and accelerate declines, while a close on a weekly basis above 2100 would negate this outlook and put pressure back on that 2015 record high. Gold. So despite this latest setback in gold, you can see the market continues to consolidate above 1200. The market is expected to continue to be very well supported on dips towards previous resistance now turn support in the 1190 area, with only a break back below that level to really compromise the newly adopted constructive outlook for gold. Look for this consolidation eventually to result in a break higher back above the yearly high, which comes in around 1284, and towards the 2015 peak at 1307 further up.